Hey guys, how's it going? Today is Friday, June 22nd, and this morning we took a trade from the mobile device. Recently I started my 9-to-5 job at Hasbro, which has sort of put me in the position of watching the market open instead of participating in it. I obviously don't have my trading computer, aka my laptop, at work with me, and I can't sort of sit there and trade on company time, so instead what I can sort of sneak in is my phone. And this morning I was comfortable enough to take a trade after having watched the market open for the past, week and a half. So we're going to analyze it. This morning I was in at 940 and I was out at 946. I bought a single option. I was trading the put side at a 275 strike, and the contract was expiring today, so it was relatively cheap. As you can see here, it was 34 cents when I bought it, 44 cents when I sold it. So a $10 gain. However, when you look at it in percentages terms, that is 29%, which is pretty powerful and just shows how you can leverage options trading to definitely make a great return on your investment. So let's take a look at the chart and see how things unfolded. Alright, so briefly we're going to take a peek at the daily chart. You can see that we made a nice aggressive move up here, and then now we're in the pullback phase of that move. So it was not a surprise to see that we've sort of been in a small downtrend these past couple of days after such an aggressive move up. It's sort of time to take a breather, consolidate a little bit, which is exactly what's been happening in the past few days here. So now, after noting that, we're going to peek over at the 2-minute chart, which is what I was watching on my phone this morning. And we can see that the market opened, made a light, decent move to the upside, and then sort of crashed. So as that crash happened, I sort of watched and watched. I didn't want to chase this move to the downside and get caught here and get stopped out. So recognizing this sort of pennant pattern that was forming in the bear's favor, I waited for this pullback, if you will, and got in, as you saw earlier, on the 940 candle early on in the session. So probably, somewhere right in here. In hindsight, I could have had a better entry up here, but realistically that only would have shaved a couple cents off of my entry point. I'm not too concerned with it, just because obviously if I had waited for it to unfold and sort of keep moving to the upside, I would have gotten burned and not gotten a great entry at all and sort of chased this move to the downside. So I'm happy about that. The only two studies I have on my mobile device platform are these two here, which is the 10 EMA and the 20 EMA. And right here at the 940 period, we can see that there was a decent separation between the two, indicating a pretty strong bearish move to the downside. So I got in here on the pullback knowing that if this was truly a bearish pennant, it would move down to the downside again. And you can see here that it did. The price came all the way down to the strike price that I had played, which was 275. So I was out here. This is the 946 candle, and that's where I got out. It's as simple as that, guys. I was in here, caught this move to the downside for 29%, nice $10 trade, and in 6 minutes I was up $10. Not bad for first time trade on the mobile platform, and also not bad for taking a trade while I was at my 9-to-5 job. So in the future I would definitely like to experiment with advanced option strategies and how I can swing trade options and sort of leverage the time decay in my favor. Being that I can't watch and participate in the market open and the volatility that comes sort of at 9:30 to 10:30, I find that it's time for me to step back, reevaluate my strategy, and sort of build something that's going to work for me. So that being said, if you like the video, feel free to give it a thumbs up. If you have any questions, leave them in the comments section. And if you like this material, feel free to subscribe.